This is Benzinga Live with Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojasek from Trend Spider. We have a
breaking news. Whoa. What is up, Zinger Nation? Welcome back to another episode of Benzinga Live. Happy Monday. It's a new week. It's a new year for the market. It was the new Lunar New Year last year. I don't know how all that works, but the market seemed to have turned a new leaf the past couple days. We're looking at daily candles on the S&P 500 here, the SPY. You can see right here on this candle where my cursor is. That was on Friday, January 20th. We finished up 1.86%. Today, up more than 1.3%. I can't tell you the last day the SPY closed, went up more than 1% 2 days in a row. We'll see where we close today. But for me, for most people out there that are long equities or a long-term investor, they have a retirement account, they love it's just good to see this. It's good to have some sort of kind of, fear subsiding, people thinking, because it seemed like 2 weeks ago or whatever, heading into this earnings season, it seemed like a foregone conclusion, right, that we were going to a recession. All the stocks were going to head lower. But like I've kind of been saying on this show, and again, I don't want to sound like a broken record. We're going to talk about, different things today. We'll bring on, different people this week, different guests, get new opinions and whatnot. But I've kind of been long saying that I think some of the recession fears, and I think fears that have been bogging down the market in general, have been overblown. And for some reason, there still seems to be like a very, very enthusiastic, bearish base out there of people that just, for whatever reason, again, want to see, the market go down and want to see the Fed fail and want to see inflation come back high, almost as if they're rooting for these bad things to happen. But again, I've been kind of saying that, look, if I don't think that things are as bad out there as other investors are, and then the stocks are getting sold off, I should be adding. So I've been, it's frustrating, I guess, personally, if I'm being honest, because I've trading wise, I made a lot of money, bullish trading up, but last week I was getting chewed up, or the last 2 weeks here, we'll go to the SPY daily candles. I lost a lot of money. I think here, basically all these red days, I was buying calls, thinking the market would come back. Never really did. We're finally getting these legs now, and I've kind of expended a lot of my income that I could use on options trades now. But let me catch up on the chat real quick. What's the holdup? I'm triple parked. I don't know what the holdup is. Were you saying? Thank you, the Crow. Hope you had a good weekend too. Hope everyone had a good weekend. And again, I understand too. I should clarify that I understand there are some people out there that aren't rooting for, bad things to happen, and they're bearish because they think the market's going to go down, not because they want the market to go down. And I do understand that, because I'm bearish at times too, and I'll play to the bear. So I don't think obviously anyone's a bad person for me. But I'm saying right now, if you're looking at the grand landscape of everything happening economically, I think the people that are super bearish right now, you have to dismiss the fact that inflation has cooled down a lot. You have to dismiss the fact that the labor market and the economy has remained hotter than a lot of people have expected, regardless of the Federal Reserve. Q's taking a breather. All right, let's. Regardless of the Fed raising interest rates, a lot of people thought as soon as the Fed started raising interest rates, we were going to see, the unemployment start skyrocketing. And again, we've seen layoffs start coming in the tech space specifically, more broadly, maybe even coming. But that doesn't necessarily mean, just because you see a couple companies laying off a few thousand people, that this huge 07, 08 type recession is coming. And that doesn't mean I don't say that to mean, everything's, fine and dandy right now, and I'm as bullish as I can be, and I'm buying everything on margin. No, I understand the risk of a recession right now remains higher than it had been probably at any point going back to, 07, 08, ever since we got out of that, and we've been in this great bull market for 12 years, aside, of course, from COVID, which technically by economic standards, I think was a recession, but many people, wouldn't really, consider it one, especially with how strongly we recovered, both in terms of the stock market and the economy. And if you guys remember, like not the summer of 2020 when COVID had only been around a few months, but the next summer after that, I think the vaccine really started rolling out in like February, March, April of 2021, May, June, July, like that whole summer the economy was, I mean, people were buying flight, like restaurants packed, like everyone was traveling. Like it wasn't just the market that rebounded, the whole economy did. And so, the economy, there's a cyclical nature to it. So it went down really hard with COVID, came back really hard, might have a little breather, but doesn't mean, again, necessarily that it has to be like this big 07, 08. So I just want to make that clear that when I'm saying this, I'm not trying to say that I think everything is so great and that I'm on a scale from 1 to 10. I'm not like a 10, 10 being the most bullish you can be. And I recognize the fact that a recession isn't off the table by any means. And there might be people out there that are looking at the market right now thinking, oh my God, why are people, why did SPY go from 375 to 400 in the last 2 weeks? What good news have we gotten? In fact, we've gotten a lot of bad news. We've seen companies announce layoffs and all of these things. So I get it that, I think a lot of people are on both sides confused by the price action. Let's see. Price of eggs is ridiculous. Better to buy your chickens and make your own. Yeah, I did see a news story about. See, but that's actually the price of eggs. This is a great example because, we talked a lot. We've talked a lot about inflation almost exclusively over the past year. How do you make your own eggs? Shall you buy some egg laying hens? Buy some chickens. So this is a good example actually with the eggs. So if I said right now, and I'm not really trying to argue this or whatever, but if I said, okay, I think the Federal Reserve, inflation's coming down a lot. I'm paying the same price for gas right now that I did a year ago. If I said, I think the Federal Reserve should start cutting interest rates right now, someone could say, what are you talking about? The carton of eggs is, $3.50 right now, double what it was a year ago. The price of eggs is insane. Inflation's out of control. The Fed can't start cutting rates. And really, when you go into it and why the price of eggs is so much higher right now, sure, there's, inflation across the board in food, and that has to do from part of it. But why eggs are so expensive right now is because of an avian flu, a type of bird flu that has come in and wiped out more than 50 million egg-laying hens in the United States, thus limiting the supply of eggs. So if demand stays steady but supply becomes constrained, then the price is going to go up. What the Federal Reserve does with interest rates has no impact over those 40 or 50 million birds that have died from a disease, and it's not going to impact the price of eggs. So I think a lot of things that we've seen in the last 2 years, not, exactly like the egg situation, but have been issues on the supply side. Go back to semiconductors. Most of the semiconductors in the world are produced and manufactured in Taiwan. Taiwan was dealing with a lot of not only, raw material issues throughout COVID, but also labor issues, made it harder to produce semiconductors there. Had nothing to do with low interest rates or stimulus checks. Why a lot of, GPUs and computer cards were going up. Well, I should refrain that because you can't say that. Part of it is that people had more money, so there might be a little bit more demand, and that plays a part of it. But I think most economists would argue that, at least specifically, definitely in the egg situation, probably in the semiconductor situation, that those issues or the price is impacted more by the issues on the supply side than any increase in demand. Because you could argue that like demand for eggs actually does increase, not steady, because if the population of the United States is increasing. Oh, am I frozen? Like from the movie? You want me to sing? I live in an apartment. Where do I store my live chickens? So yeah, Arthur, that's just where it's like the eggs, like people can use stuff like that, and for whatever reason, maybe because eggs, because maybe because most, I don't know, do most Americans eat eggs? I don't know. Everyone eat eggs? I don't know. But maybe it's just because something that like everyone relates to. But for whatever reason, that's been getting like so much media attention. The price of eggs and stuff. So I think like that might burn in people's heads that inflation is as bad or as worse as it's been, when that hasn't really been the case. I think, I mean, it's not, I think like objectively inflation has come down a lot, but again, if all you were focused on was the price of eggs, you wouldn't think so. Yeah, I I don't know. Like I don't honestly like I've read that too about eggs. Like actually not great for you. Good source of protein though, if you're worried about protein. Um Egg discussion is real world, good example. Um Cheapest way to feed viruses in the development of egg. I don't know what that means. Although the newest thing now is that they're talking about they want to start vaccinating all the like egg-laying hens so that another bird flu can't come through and wipe out like 40 million of them like this happened this time. And if that happens, I wonder if there'll be a lot of people that are now like, I'm not going to eat eggs anymore if it's coming from a vaccinated chicken. So that could be something to watch out for. It's a prediction that I think will come. But we'll see both sides of it. Yeah, I'm not like a dietitian or anything, so I don't know. Sound easy, Mike. I think it should be. I mean, no one else is complaining, and I'm not working. So if I was frozen or the sound wasn't working, you know, I think we'd know by now. But yeah, I mean, I think issues like that a lot. I mean, it's a lot of it just how that issue is framed. The egg, like I don't know how much of when a cable news broadcast does a 2-minute spot on the price of eggs, like how much contextual information are they giving? If someone's watching it on, and I'm not calling out any specific, I could be talking about Fox News right now or CNN, right, whatever it is. Like a lot of times, just cable news networks don't give proper contextual information. So someone might like see that the price of eggs are higher on the news, but not really understand why, and then walk away saying like, what the hell's the Federal Reserve doing? Or what the hell's the president doing? Why is inflation so bad right now? And like not even, be really learning about these supply side issues or whatever. But guys, all right. Going back to, all right, SPY keeps ripping Qs. Looks like we might be making another leg higher. Let's go to a 5-minute chart here. Q's trying to take out that high a day of about 289.50. We're at 289.15 right now, so about 50 cents higher on the Q's. Will be at the high a day. Google continuing to show some strength after, again, the company announced it was laying off a bunch of employees last week, about 12,000. And we're starting to see this across the board. Bless you. We're starting to see this across the board that, companies are like announcing bad news and getting great reactions. Companies announcing layoffs, whether it's Google, Netflix reported and had a good quarter. I don't think like blow away, but the stock seems to be saying blow away. It's at 357 right now. Completely filled this gap to the upside. Which good to see there if you're long Netflix as I am. Tesla continuing to have a strong day today. And Tesla, I know for a while, I mean, Tesla had for like years been the most or one of the most shorted stocks out on the market. And I think over a while, like shorts in Tesla just got so exhausted that Tesla actually dropped out of like the top 10 most shorted stocks. And recently it's been getting back up there, right? The short interest in Tesla has started increasing drastically over, really as the stock started sliding, go figure. And so now I wouldn't be surprised, I don't have the data right in front of me, if Tesla again is back in that top 10 of most shorted stocks out there. And the stock's been performing really well, which, I mean, over the past like 2 weeks, the stock's been performing really well with the S&P 500 and with some, moving with some other names. But I would not want to be short Tesla here. I would not want to get caught in some sort of a squeeze here with Tesla because, it's one of those things where I think even if everything with Tesla specifically isn't looking good, which we could pull up a whole slew of news stories over the past month or so, or numbers, or whether it's Tesla cutting prices in China and then the U.S. or whatever. And I think no matter what it is, if you're super bearish Tesla, if you're part of the Tesla Q community, if you're Jim Chanos, you could point to 100 things right now and say, look, like all this is a house of cards about to fall, like all this is bad, and I wouldn't really argue with you. But I don't know if that matters in terms of stock price right now, because I think if we get more bullish activity, not just in Tesla, but in the market, I think Tesla will participate because it's been one of the stocks that has been beat up a lot, still has a lot of retail interest. And as the stock continues, it doesn't even have to keep going up. If it just doesn't go down, more and more shorts are going to be forced to kind of cover their positions. And I mean, I think you could see, I'm not saying, you're going to see Tesla like squeeze and go back to all time, but Tesla's at 140 right now. This thing was like at 105 or $100 a couple weeks ago. I think you're going to be able to see a lot of people thinking like, okay, this has got to go back down. I'm going to buy like these puts. I'm going to short the stock outright, whatever it is. And I would not be surprised to see this thing like shoot very rapidly up toward, 190, 200 in the next couple weeks. Again, I don't think this is like going to squeeze to all-time new highs or be like a GameStop where we'll see, Tesla short squeeze to, $500 a share in a couple weeks. I'm not saying that. I'm just saying we're at 140 right now. I'd rather be long than short Tesla right now. And that says someone who doesn't really love the stock. And so that's where I'm at right now. I'd be too scared to get caught short in here, so I'd be going long on Tesla. Again, just some short squeeze possibilities. Other names, other short squeeze names moving today. Carvana, up 7%. Wayfair, up 26%. Wayfair Inc., wow, back up to $58. I mean, look at this. Look at this freaking stock chart. I know there are a lot of stock charts out there that look like this, but Wayfair's is interesting. All right, let me just catch up on the chat real quick, guys. I don't really know why, like, some of these... I don't know, honestly, why some of these names are moving so much. So let's go back to Netflix real quick. We talked about, so Netflix reported last week, one of the first big tech companies to report this earnings cycle. Actually, I think the first big. So I had given this thesis on Netflix before. Now he got frozen here. No, I was frozen in real life there for a second. All right, we'll get back to Netflix in a minute. In the meantime, I want to do our first new segment alert. We're going to do a quick check-in with our news desk. So without further ado, we're going to play our little bumper intro here. And when we come back, I'm going to bring on Randy from our news desk for a quick news desk update, see what stocks are moving today and why. All right, what is up? I've got Randy from the news desk. Randy, look how many monitors Randy's got. What's going on Wall Street, Randy? No, hold on. Give me 1 second. Is it muted on the mic? All right, we'll bring Randy back in a second. Rohan, will you get Randy's mic turned on, please?
Testing. Can you guys hear me?
All right, we got Randy's audio now. All right, we've got Randy. Randy, what's going on Wall Street? I saw a bunch of stocks moving this morning. What was happening?
There's a lot happening today. A lot of upgrades going around. Starting off with the semiconductor industry, like AMD, Skyworks, Qualcomm, all received upgrades from Barclays.
Okay,
So semis are on the rise.
that was this morning before the market. These analysts put out the upgrades.
Yes, sir.
All right,
Yes,
so yeah, you can see that here in the semis, and the Nvidia up more than 6%, AMD up more than 8%. You could look at SMH, the VanEck Semiconductor ETF, up more than 4%. Randy, any other big headlines today?
Yes, sir. We got Shopify. Shopify also received an upgrade from Deutsche Bank and a price target raise. Those shares are up about 7% today. Shopify is on the rise as well.
Wow, yeah, look at Shopify at $43. This is crazy that this stock got down to $24. I mean, it was all split adjusted, but even with the split, this thing was at $176 at its height a couple years ago. Again, got down to $23 a few months ago, back up to $43 today. So that sounds like the news of the day, Randy, are these big upgrades coming from some of the big banks, whether it's Barclays or Deutsche Bank, bringing semis, Shopify, some other names higher. Anything else?
Yeah, to add on what you were saying a little bit earlier with this bad news and stocks trading higher, Spotify, they announced a workforce reduction earlier this morning, and shares are up about 3.5% today.
Wow. Yeah, Spotify now back above $100. You can see that here. We've got the whim on Benzinga Pro. Spotify shares are trading higher after the company announced a 6% reduction in headcount. Well, Randy, we appreciate the update from the news desk. Again, if you guys want some more of this information, pro.benzinga.com. Use your free 2-week trial. Thank you again, Randy.
Thanks, guys. Have a good one.
All right, y'all. That was an update from our news desk. Again, pro.benzinga.com if y'all want some more of that info. All right, y'all. So, yeah, I mean, I do want to, last point Randy and I talked about, like Spotify trading up on this news of the layoffs. We saw something similar with Google or Alphabet, if you will. And I want, like, not just the layoffs, but specifically, I mean, and earnings will be a good tell of this too, because if Microsoft, like say for example, Microsoft comes out and says, here was our quarter. Yeah, the numbers were meh, but we're actually expecting numbers to get a lot worse going forward. There's a chance, well, depending on what they say or like how they say it or what those numbers, if they revise, give guidance and lower forecasts or expectations or estimates, and the stock goes up. That might be because the market was already pricing that in and actually pricing in more of a drop-off in earnings or more of a drop-off in expectations. So if the company comes out and says, yeah, we're expecting next quarter to be bad, but we're only expecting it to be 10% worse than this quarter, and the market was pricing it to be 15% worse, the stock reaction could actually be positive. So that's why a lot of times you see the market bottom out before earnings cycles or a lot of this, because if you think about, let's pull up Snapchat, for example, because I don't think Snapchat's gone through any stock splits or anything, so this will actually be pretty good. So Snapchat, here's the COVID crash, brought it down. Snapchat's one of those stocks where like the COVID crashed it, which like it should have never gone down off COVID in the first place. I truly think like that was the biggest like market inefficiency, was that there weren't, I guess, enough investors realizing that like, hey, COVID is here. It's going to be around for like however long. And these stay-at-home stocks, if you will, Snapchat, Zoom, whatever, like these ways that people are going to connect through their phones and devices when they can't go out, when they can't meet, when they can't go to school, like would all do well. Amazon, like how did Amazon stock ever go down? I guguess you could also say like they're like the fear was that the whole economy was like going to come grinding to a halt, and that's and like because at the time the Fed's pretty drastic measures of both, you know, QE and Fed and interest rate cuts and stimulus bills, like all those things weren't, you know, established yet. So I guess that makes sense. But still, something like Snapchat, I mean, the fact that it came down so much with the COVID, it was coming down before the COVID crash too, which that could also be a part of it. But anyway, in this cycle, when I mean cycle, I'm talking about in this like bull market here during COVID, when the stock was just going up and up and up. I remember Morgan Stanley, other banks put out price targets of more than $100 on Snapchat because the stock was just going up so much, and we were in a bull market, and it was great. And then as the stock starts going down, basically the same analysts start cutting price targets, and they're like, oh, it's not good, whatever. And it basically looks like uninvestable until a point where you get to the point where then those same analysts start raising price targets again and saying, okay, maybe the environment's not so bad out there. So I think like realizing just that how cyclical both the economy and the stock market are, and thinking that, okay, just because something's going down. I mean, I remember even when Apple was at like 125 a few weeks ago, and I was saying like, I wouldn't be surprised if Apple's sales struggle and the stock like moves a little bit lower. But at the end of the day, like I see any weakness on Apple's chart as an opportunity to buy. Like you could look at this chart and zoom out and think, yeah, I mean, actually, it doesn't look like too bullish when you zoom out, but I still like Apple. If not from a chart perspective, from a fundamental perspective. Yeah, and the other part with the layoffs are a lot of times investors are less worried about what the stock has done like this, today and what it's going to do in the future. So a lot of times these companies that are doing layoffs, I guess the expectation is that they're going to be able to stay productive while reducing costs as well. We could take some stocks out of the chat if anyone has any they would like to look at. SPY, let's see how we're trading on here. Let's go to the 2-minute chart here. I don't typically use the 2-minute chart. I just will on if I'm trying to get a gauge just on like the intraday movement. I mean, you could do the same thing with like a 5-minute chart or a 2-minute chart, but what I'm curious about now, so this is actually a good example, the Crow, of why I would use the 2-minute chart right here, is because on the 2-minute chart here, I'm going to be able to tell more easily if we're like trending higher and closer to this high of day or lower. So this is just a very rudimentary, like binary type of like technical analysis where I'm like very, because we're doing the show right now. Like I can't focus on a lot of different indicators or a lot of different things at once. Just literally looking at, are we going to break through that high a day, or, continue moving lower from it. And right now on the 2-minute chart, I'll zoom in here. It's been pretty bearish since we hit that high of day at 402. We'll call it 402. It was really 401.93. Besides this, you rejected off there. We went from, again, we'll call it 402. Went from 402 down below 401. So dropped more than $1. Started inching back and then rejected again, really before even getting close to that high a day. And so now we're moving lower again here. And I want to see, and again, the only reason I'm using the 2-minute chart here is because it's just giving me more of a look at this intraday movement of the last, 20, 30 minutes than even if I was looking at the 5-minute chart. And so again, here, look, we just closed another 2-minute candle. So here we're starting to form a new one. I would want to see us start, and this price action is fine to me. Some like, a couple green, a red. It doesn't need to be huge green ones like we saw here where my cursor is. It can be smaller, red and green candles that just get us back higher toward that high a day. I would like to see that. And then, depending on the price action and depending on how I was feeling, maybe I would play it a little long before it hits the high of the day, expecting it to break through. And I want to be part of that breakthrough. Or maybe then I wait for it to break through. And if it does break through, then I go long. So yeah, you can see the SPY now rejecting here another 2-minute candle. So yeah, we've actually had, this is some decent volatility, decent movement in SPY, down about 0.2% the last 10 minutes or so. Thoughts on Mullen? Check it out. Was that a Mullen? No, that was a Lucid Air, I think. I saw a post the other day about a Lucid that like sold for, I don't know, some like post on Twitter that basically was like at $170,000, which I didn't even know Lucid made cars that expensive. Lucid that had like 2,000 miles on it, barely driven, that sold for like 100,000, like way less than, yeah. All right. GNS. Check out GNS. I don't really know. Oh, wait. Okay, so GNS is different than, I don't really know too much about Genius Group. I mean, hmm. Seems like a huge short. I don't know anything about that company, but just by looking at that web page, I mean, they were like boasting that one of their companies is the Antelope Valley University. I mean, what was this like a how did what is this company? I'm so out on this. I'm as out as you can be on this. Um, all right. Other stocks I've been watching, obviously Baba, Chinese stocks have been showing a lot of strength throughout the past few weeks, really. I mean, look at this. I mean, going back to October now. So in the last 3 months or so from Baba, going from about $62 up to 180, almost an 100% increase there for Baba. Incredible run for not just Baba, but really a lot of other Chinese stocks as well. Of course, since Baba's the biggest, a lot are going to move with it. It's kind of like Apple, right? If Apple announces great news and is up 5%, right, you could assume other big US tech companies are also going to be up, and vice versa. The opposite is true as well if it's bad news and the stocks are down. Um, all right. Microsoft announced a new investment in OpenAI. We go to the Benzinga Pro news feed here to talk about that. Also, over the weekend, I did see that ChatGPT announced a kind of pro feature. So it was going to start charging per month, I believe, for like enterprise clients. So for businesses that want to use ChatGPT, I think it was pretty cheap. I think it was like $45 a month or something. But I think a lot of people saw that coming, right? That ChatGPT was gonna, put it out there, get everyone talking about it, get all the buzz. People are gonna say, "Oh my God, this thing is so great." And then, as soon as everyone's using it, boom, they turn on that paywall and say, "Okay, you want to use our feature? You got to pay us $45." So Microsoft again had already had an investment in OpenAI, had been in talks with trying to, I think, invest more in it. So Microsoft ramps up efforts to build AI supercomputer with ChatGPT ahead of Q2 earnings. Microsoft confirmed a third investment in OpenAI's ChatGPT Monday morning. Microsoft previously invested in the company in 2009 and 2021. The new multi-billion-dollar investment aims to accelerate AI breakthroughs. So, I mean, when we had Bob O'Donnell on not too long ago, we talked about AI, and that was one of the things that we talked about was that, you know, there will probably be a lot of different sexy, growthy AI type smaller companies that pop up. And at the end of the day, like, maybe the best AI plays are going to be Microsoft, Google, and Apple, right? Like, they're not going to let this new generation of tech come in and just walk right by without Amazon, Apple, or any of those other companies kind of coming in and saying, okay, we're going to do our own R&D in this. We're going to invest our own billions and billions of dollars. And by the way, I mean, Apple, from just a purely like power standpoint, Apple has so much cash that like it could do. I'm not going to say it could do whatever it wants, but I mean, look at this. I mean, Apple's got $23 billion in cash. It's like enough to buy. Look at this. It could buy HP. All right. Tesla is still up about 6.5% today. I mean, I said it earlier. I'd rather go bullish Tesla here than bearish for on a trade perspective. Playing the market, stocks doesn't mean I love Tesla. In fact, probably the opposite is true. Right? If there's one stock I wouldn't want to hold in my portfolio over the next like 5 years that's in the S&P 500, Tesla's the top one. I just think it is the most likely out of all the S&P 500 names to just like get absolutely crushed. Apple have 121 in debt too. We're out of the bear market finally. I mean, Julie, I wouldn't say that yet. I would just like, especially let's get through the earnings season, whatever. I will say I think it's a good sign that a lot of fears about a big recession are starting to subside. I think people are realizing that maybe the inflation issue isn't as big of a deal as a lot of people had worried about, that the Fed might be able to start cooling it on the interest rate hikes sooner than some people expected, all of these things. So all this is good. I just wouldn't get too out in front of ourselves. And I mean, right, Apple has debt, but it has like it has more asset. It doesn't really have debt. Like technically it has debt, but not really. Like it doesn't have outstanding, like it doesn't have more liabilities than what it's worth. Apple has like strategically managed debt, like good debt. Debt isn't debt bad. All debt isn't bad, right? In fact, if you're a company, if you're like an Apple and you were and Apple wasn't utilizing some sort of debt, especially in the type of market we were in before, you know, the Fed had to start raising interest rates, it'd be inhibiting its own growth. Like not just because a company's carrying. I mean, look, Apple's carrying or no, sorry, $98 billion in long-term debt. Doesn't mean Apple's in like a bad financial position. Just strategically using debt for growth. So I wouldn't see that as like a huge red flag. And again, I'm no expert at like reading balance sheets or financials, but I think Apple's financials are pretty strong. Jay Rice says SMH is up over 15% in January so far. Biggest start since 2001. It got crushed in February that year. Feed the ducks. Yeah. Okay. So Jay, you're saying it's best start not to it's best start to a month or to a year since 2001, because that's gonna be a big distinction. I mean, because I would be surprised if there wasn't like a month or something in those COVID markets where So I feel like I remember a time where Nvidia was up like every single day. Yeah. I mean, obviously 2001, I mean, is February kind of when the market started rolling over and crashing there, or was that before or after that or before that? I don't know. I wasn't trading back then. I was busy. Um, yeah, I mean, as far as the semis, when do the semis report? Like Nvidia always reports really late, right? Yeah, February 22nd. So like all the tech stocks report, and for whatever reason, like AMD and the semis report like weeks later. I don't know. I mean, I think out of the things, if I had a bunch of money sitting on the sideline right now and I didn't have anything long and I was sick of like, oh, it feels like stocks are going up and I'm not in the market right now and I wanted to get in, I would not start with like these names, with Nvidia, with Baba, or like I would not start with essentially the names that have been outperforming. Oh yeah, I mean, 100%. And anytime you see something, especially like a big fund like SMH up over 10% in a month or so, like you can expect people to start taking profits. Because those funds like that are that big and stuff typically only move that much in a month if there are a lot of big players in there. And you're going to see those big players take profits because a lot of them aren't the type of, retail traders that are going to diamond hand something. They're going to see, like Jay is saying, 15% is good money manager in a year, let alone for a month. So if you get that, I've gotten out of trades that I've absolutely loved for that, just because I've been fearful of other people, essentially like I'll be long Southwest because I love the airline trade right now. Then it'll be up 10% in a couple of weeks and be like, all right, now I'm getting out of this. My thesis hasn't changed, but now the price has changed. And that's happened like a lot to me throughout the last like few months, where like my thesis remains the same and the price changes, and it kind of changes outlook. Baba to 110. Yeah, it has looked like it's starting to come down, roll over a little bit here. And again, like I just would not want to. In fact, it's the opposite. I wouldn't want to buy the things that have been outperforming the market. I'd probably look for the things that have been underperforming the market over the past few months, like whatever those things are. One thing again, I want to talk about. We were talking about copper names last week. Southern Copper, just been on an absolute tear since October, going from 49 to 74, rolling over the past few days. You can see in some other energy names, not particularly weak today. Like you see Chevron still up, but just not really, you know, outperforming the market. XLE up about a percent. Um, XLF about up a percent. DDOG, Datadog. I haven't checked out Datadog in a while. I mean, this is one of those tech companies that just like was freaking running with everything else during COVID. Look, this got up to more than $200, now trading below 100. Yeah, I mean, I get like if you were if you think like if you had some thesis about this being the like bottom of growth right now, saying like okay, down here, like this is where I'm willing to get into to growth. I think we're bottomed out. Like, and you wanted to hit Datadog, I guess. I don't have any, particular insights into if I would prefer Datadog over Snowflake or Twilio or like any of these names. What I will say is I honestly like I think a lot of those types of names, these high growth, not very established tech names, I think will probably all pretty much trade with each other, right? Your Asanas and your Rokus and your Upstarts and your Datadogs. I think those are all going to pretty much trade together. You'll have your winners and losers, don't get me wrong. In fact, you might even have some of those companies out of them that like make it and don't make it, or some that get bought out and whatever. But I think at the end of the day, the environment that's good for Datadog is also good for Upstart, which is also good for Asana. And then the opposite is true as well, where the, bad environment is bad for all of these. Baba led, Neo lagged since Jan 1st might be a nice reversion. Yeah, I mean, I wouldn't love to see the denial bears. Every major index is breaking out of the bear downtrend. Wake up, bear market is definitely over. Yeah, I just don't know. And I kind of started the show talking about this because, like, I'll be honest, I'm very active on, like, not myself active in terms of, like, posting, but I read a lot on, like, FinTwit and stuff. And, like, it just seems like there's so many loud, outspoken accounts that are bearish, but they get, like, emotion. It's almost like people want to, I don't know. I don't know what it is. Like, it doesn't seem like people are bearish just in like a like they think because they think the market's going down. It's almost like political in a way, right? Like people like want the market to crash to like prove how bad things are and like the sky's falling and all this, and like you see the same people, and it's just like, oh my god, like I don't know, like I don't know what world you're living in, but I promise like things aren't as bad if you go outside as they seem to be. Which yeah, like I mean everywhere. Like again, like going out and stuff, like every single restaurant and whatnot, like had to wait this weekend. It's just, it just doesn't seem like when you go out and actually go to grocery stores or go to restaurants or whatever, it does not seem like there's been any slowdown in spending. So I don't know why people are so bearish or why they cling on to it so much. Because like here's my thesis, basically, what my hunch or kind of what I'm trying to say is that it doesn't feel like people to me. Yeah, when Tesla was at 102, everyone said it was going to 50. Yeah, and like I do remember that. That it's I don't know if people are like objectively just looking at everything and saying I think the market's going lower, so I'm bearish, or if they're thinking like I don't know. I really don't know, but it seems like there are people that have like this bias to want to be bearish, and that they'll see things through that bearish lens, not through like an objective. Like I said, like I'm more bullish than I am bearish right now, so I'll be trying to like be honest about that and try to like see like where I might see biases, but I'm also not like so super bull. Like I said, like I think that there is still a bigger chance of a recession right now relative to other times in the last 20 years. But does that mean I think like a big '08 type recession is the most likely outcome right now? No, I really don't. And I don't know why anyone like would, or like people see like, and then like I would think like, okay, here's a good example, like Zero Hedge. Like you go to like Zero Hedge's Twitter feed, and I'm just like, why does this guy like, why does he think the sky has to be falling? Like, right? Like I understand, like I'll hear you out about energy and euro, you know, whatever it is, like whatever your big bear case is. But why are you like so sure that it has to fall? And then when one thing changes, right? When okay, if China being locked down and COVID was part of your bear case, and then now that starts to open up and you shift and say, okay, I'm not worried about COVID anymore. I'm worried about inflation in the US. Be like, what the hell? A month ago, you know, you were so bearish because of this, and now you're so bearish because of that. Like, are you really bearish because of these things, or are you just bearish and now you're finding things to try to meet that bias? And again, like I could be doing the same thing on the bullish side, but I at least, you know, have been bearish at times, bullish at times. I'm not like perma bear or perma bull. Oh yeah, and that's exactly, I didn't even see, that's exactly what Jay Rice was saying. Like you don't have to be one way or the other. Let price determine. And I'm kind of a big, you know, like people, you can be more of a momentum person or more of a contrarian person. I think I'm more contrarian, where I would look at, you know, something like, what's a good example? I'm trying to think of a name that's like still getting beaten down that like I wouldn't mind buying right now, or vice versa, like a name that's going up a bunch that I'd want to sell. I don't know. I mean, either way, like just because there's a lot of people that are bearish out there doesn't mean, you know, what they have to say is true or is going to come true. And the same thing with people that are bullish. Cost me a lot of money in the past. Yeah, and that I think is just part of like development as a trader and personally. And like there have been times where I've been really one of my, like the onset of my trading, I first made a killing trading option. Well, relative to me, I was like 21 years old with not a lot of money, but made like thousands of dollars trading puts during the COVID crash. And I did a great job. I had the foresight to see, you know, I was looking at the news stories in China and Italy and seeing what was going on with COVID, and then watching CNBC here, and then basically being saying like, oh, we'll be fine. Like we're going to just shut down, you know, some planes from Italy, and COVID's not going to come here and businesses will be fine. The stock market had like held up. If you look at the chart and you look at the news stories toward the end of February, when all this like was clear what was happening in Europe, that Italy was shutting down all these things, the US stocks had still not gotten crushed. And I bought a bunch of puts. Stock crashed. I'm of course like still pretty bearish, thinking, yeah, like this COVID thing's because every day, I mean, at that point, the spread of COVID was exponential. So every day I'm reading about breaking cases, you know, this company is shutting its office down. Now this company is shutting its factory down. And I'm reading all these stories throughout March, basically just doubling down on all my shorts. Meanwhile, I'm not reading the stories about, you know, what the Fed's doing and why some people are getting bullish here, you know, and all this. So it cost me a lot of money too, essentially staying bearish when I didn't really need to be. And the same goes for true on the long side. And that's why I don't really try to subscribe. I've been more bullish than bearish the past few months because of price, because SPY got down to, you know, 350, and people are talking about this and that, and Europe not being able to make it through the winter of an energy and all these things. And like all that made me more bullish, not because I wanted to be a bull and I was out looking for things. So Jay, I couldn't agree with you more. But guys, we are going to wrap up a little bit early today. I got a few other things got to get to today. But please smash the like if you have not already. We shall be back tomorrow, 11:30 a.m. Eastern. Till then, stay green, stay gold.
This is Benzinga